you downloaded a video from the internet, and we have a series of short videos, informative videos, to help you with your modification. Now, the one that you've downloaded probably was the second liens and the treatment of second liens. Now, in the short video, I explained to you that the second lien, you can get an interest rate as low as the 1%, or you can even get a principal reduction. Now, let me expand on that a bit. As of this year, 2010, it was right around March, April of 2010, the President Obama signed into law the expansion of the Making Homes Affordable program. So all of those that have a second lien that is pending out there, you can now use the Making Homes Affordable to expand or to extend to your second lien. Now, the important thing to understand with second lien mortgages in this program is that you must first be modified under the Making Homes Affordable program. Now, this makes absolute sense. Think about it. They are expanding the Making Homes Affordable to second liens. Therefore, the prerequisite should be that you are pre-approved for the Making Homes Affordable on your first. Now, what the government is doing is this. They are using the TARP money, the bailout funds, that were being used towards the Making Homes Affordable program to include second liens, to throw a bone at the banks, to say, okay, if you work on this, we'll pay you a certain amount. Now, what the program stipulates is this: if the bank were to reduce your balance, say $30,000, the government would take and give the bank that money. Now, because banks don't really care about you, so the only way they would be willing to do this if somebody else is paying for it. And in fact, that's what happened in 2008 and 2009. The government put forth some guidelines saying the second lien holders must help those in need for modifications and also for short sales. So what the bank said is, they ignore it. Why? Because it wasn't required. It was voluntary. So the banks don't want to pay for these things. So then the government turned around and said, okay, here you go. We will pay for the reduction. Now, why would the government do that? Because that's important to understand. Remember, they set out a certain billions of dollars for the Making Homes Affordable. What happens is this. They were supposed to have helped about 5 to 7 million families to modify their loans. Well, the program has been going very, very slow. So after a year and a half, they've only finalized about 800,000 modifications. So as you can see, they're on pace to never meet their quota. So what happens? There's a lot of money sitting there. It is an election year. So the government is trying to throw more bones to the banks so that the second liens are reduced, and also they understand that the foreclosure hasn't slowed down. The reason being is because there's a lot of people who can actually afford their home, but they're not paying it because they're upside down. Now, they're upside down either because their first lien has a high balance and their property value has reduced, but also because they have a second lien and they're just not paying it, again, because the property has been reduced. And also bankruptcies gets rid of your second liens oftentimes now. So in understanding this, the government has to say, well, those who are modifying the first, if the house doesn't have enough value, the second lien can't foreclose on the loan. Now, this is simple. If your house is worth 200 grand and your first loan balance is 200 grand and you have a second lien for 50 grand, the second lien is not going to foreclose your house if you don't pay, because they, by law, have to pay off the balance of the first. In other words, they would have to give a check for 200 grand to the first lien, and then they still have their debt of, say, 50 grand. So here they are sitting on a house that's worth less than 200, say 150, yet they had to pay 200 grand on the first, and they still have 50 grand of their own that is owed. So now they have a debt of 250 and a house is worth 150. This is why second liens do not foreclose homes, because their value just does not allow it, doesn't make it profitable for them. So what do people do? They modify the first, because the first doesn't really take into account the second lien mortgage. Well, they do, but that's a bit complicated. The guidelines only say that you need to be gross income 31% of your housing obligation. not counting your second lien. So you can theoretically, and we've done it many times, get a loan modification regardless of the second lien. So what happens? You get your modification, you can afford the first payments. Now you can say to the bank, on your second lien holder, you don't want to help us? That's fine. I won't pay you. Foreclose me. Well, they won't, and they never will. Why? Because banks are not going to hold this debt in their accounting books for many years just so that they can come after you when the house goes up in value enough so where they can take this money, this house from you. They won't do that. They clear their accounting books just about every year. So they'll sell this debt to a collection agency. The most the collection agency will do is they'll put a judgment on you if you don't fight it. If you fight them, they may have a difficult time collecting that. But typically what the collection agencies do is they simply settle with you at some future time because they buy these second liens for pennies on the dollar. So for example, if the second lien was for 100 grand, a collection agency or attorneys will buy this for like $8,000 to $10,000. That's it. So you might settle with them for 30 grand, I'm sorry, for 30%, or even less, 15, 20 grand, and call it a day. So banks understand this. So that is why the government has said we need to help those second liens as well. So basically, I hope that explains a bit more. I've expanded on the second lien mortgages, but remember, that is why you can now ask for a reduction in principal, and you can get it. But your house must be, the collateral of the house cannot be supported, meaning if you owe 50 grand on a second, the value of the house have to be equal or less to the amount you owe on the first, which means that the second lien is not being backed by anything, by value of your house, because the house has dropped so much in value. I know this is a bit complicated, but that's really how it works, and I hope this video helps. You can download the rest of our videos. We touch on a lot of other information as well related to loan modifications. We send these videos to you every day, 1 or 2 a day, to help you understand, especially when you're doing your own modification. So hope you enjoyed the video, and wait for the other videos, and hope it helps you on your modification.